Hi, everyone. I'm Sissy Ma, Managing Director of Grow and Sell Your Biz, and the host of the Capital Raising Show. This podcast will be once a week, and my hope is that by showcasing successful capital raises, you'll be able to understand how and where to raise capital and avoid making the same mistakes others have. So we're extremely lucky today to have on the show Leanne Kemp, founder and CEO of Everledger, Queensland's chief entrepreneur, global co-chair of sustainable production at the World Economic Forum, adjunct professor at QUT, etc., etc. So any of us would be happy to have one of her roles full time, while she has 9 concurrently. And she has 31 honors and awards listed on LinkedIn. I'm sure she has more, and including Forbes World's Top 50 Women in Tech. And my favorite, 26 coolest women in UK. I think she's the top 10 coolest women in Australia as well, although she hasn't been bestowed on that honor. I had the honor of meeting Leanne many times since she started her role, took on the role of chief entrepreneur, and loved every bit of it. So Leanne, welcome to the Capital Raising Show. How are you?
I'm good, Sissy. Good to see you again. It's fantastic. Yeah. I love your backdrop. It's magical.
That's great. I mean, I can actually do something for you as well if you like. I can get my daughter to do a bookshelf or something. Easy, very easy.
I think a little bit more exotic, like Rosella jam would be probably better for me.
Okay, there we go. That's a deal. Yeah. A Rosella jam. There we go. So, I mean, you have so much experience and you've done so many diverse roles. I just think for our listeners, maybe we can focus on 2 of the roles that you have, today, if that's okay with you. So the first one is the Queensland Chief Entrepreneur role. And you've been in that role for 2 years now, or 1.5 years? Is that? Yeah, 1.5 years.
Yeah, right? It's about 18. Yeah.
18 months. Yeah, that's great. And so there are, many aspects of that role, but I think one of the main things I wanted to focus on is that business development fund that you guys also, help with. So are you able to give us some, maybe do a bit of a summary of the fund and some about the status of where it is right now?
Yeah, absolutely. So the Chief Entrepreneurs Office was created about 4 years ago, and it's a program of works that sits beneath Advance Queensland as a part of the Queensland government. Mm-hmm. And of course, we're guided by the Minister for Innovation, Minister Kate Jones. And the BDF is the Business Development Fund. And that's a co-authored fund with the Queensland government. It's about $80 million in the fund sizing. And it's deployed already a significant amount of capital into many Queensland companies that have been starting up and scaling up, both technology and even product and service companies. So it's not prejudiced towards technology only, but it is prejudiced towards great entrepreneurs and good founders that are building the amazing businesses, solving for very real challenges and or are coming up with scientific endeavours that we know and can understand that will impact both the Queensland economy and even have opportunities to scale out internationally. The fund is a great fund. If I think about different types of capital vehicles that help founders start and grow their businesses, some of those can come from venture capital companies. It's very rare to actually find a government that's putting together the right set of financial scaffolding to help founders start businesses and scale. Yeah. And so this fund is $80 million. Those check sizes can vary in size, but one of the rulings is to ensure that the funds are matched with other investors in Australia. So another investor in Australia needs to be AFS licensed. It needs to be a legitimised investor. And the BDF, the Business Development Fund, will look at those investor dollars and match that money in. Mm-hmm. It's also what we call a debt equity fund. So it enables the ability for that debt to be bought into the convert to equity, or for the founder to pay that money back. And so that's a really interesting proposition for some founders to consider. Depending on the stage of the business, of course, is always about the types of decisions that you make as a founder or as a CEO of the company. but we've seen over 150 companies being invested by the BDF.
Wow.
And many of them are still engaged with the BDF funding rounds. And we've also seen exits or M&A activities occur where those businesses have become so successful that someone has wanted to purchase them.
Yeah, some names.
So as of today, there's still an allocation left in the BDF. Right. And in the midst of COVID, I know there's been a rethinking of how they could best support the existing portfolio of companies, because there are many that have already been supported by the BDF. And I think, like many venture capital companies and or investors, we're concerned about the businesses that are currently invested in and are currently employing people.
Mm-hmm. Yeah. And so I understand also the funds get recycled back into the fund as well if, the investor buys the BDF out, right? Has that happened?
Oh, yes, of course.
Mm-hmm.
Yes, that has happened. I think there's been 3, if not 5, I don't know the numbers off the top of my head, but certainly successful exit or M&A's activities where those funds have been recycled back in.
Right. Do you have an example, like a company name, for example? You think?
Well, I think there's been something public on the website, so it's pretty easy to find, but we'll just chase that down while we're talking. And someone from my office will see if we can get a couple of names for us to talk about through this podcast.
No, that's fine. That would be great. Yes. So do you want to talk about your experience with Everledger, in terms of how you actually raise capital and, when, where,
sure,
how many people, and all that? Yes.
So Everledger started in the heart in April 2015, and I'm a sole founder of the company. But I didn't employ anyone in the business until well into 2016. So more than a year after I started the company was then my first employee. So the very first year was me bootstrapping it, living off a credit card, flying around the world, engaging with customers and building the first version of the technology. Right. And it was in early sort of 16 that I decided that I would think about raising some capital, very small amount of capital at that stage, through an angel investor that was a veteran in Silicon Valley. Her name is called Lisa Gansky. And she was actually one of the founders of a company called Ophoto that Kodak purchased subsequently. Wow. Yeah. And so that was one of our very first angel investors. And then we embarked upon a number of years later, thinking about strategic investors that were corporate as well as a venture capital company. So Vickers, which is a VC firm in Singapore. And then we had strategic investors like Rakuten in Japan, Bloomberg in the USA, Fidelity in Canada, and more recently, Tencent in China. We've raised over $22 million in capital for Everledger across those various different waves of growth and the various different types of investors that have engaged with us. And now, of course, we're facing COVID. What do we do next in terms of our capital injection and the types of runway that we want to see built for Everledger goes well into 2022? So I've been contemplating what is the next best way to ensure we bring longevity in our capital banks into the company. And more recently, we've seen the UK government release what we call a future fund. And the future fund enables a convertible note structure or a safe note, if you see that terminology as well being used in the same, to enable those funds to be made available to a company as a way of bringing capital. And then the terms of that convertible note or the safe note will actually wholly convert to the capital table at the time of the next priced round or the next funding round. And that would be our Series B. And we anticipate that our Series B will probably be in around 2022, I would think. Right. So what do we think about capital raising? It will always take a lot longer than you think. Yes. It's likely you receive less money than you want. That's an exhaustive process that doesn't mean that I'd probably never celebrated a capital raising round, because I don't see it on the same important scale as revenue. I celebrate our customer contracts. I celebrate our revenue. Yeah. I don't necessarily celebrate that we raised money, because raising money for me feels like a debt. It feels like I owe it back. Right. So we've never had a culture of celebrating Series A's or Series B, because for me, it's more about our revenue and our customer acquisition that is actually the celebration marker.
Most definitely. Revenue is always the best source of funding, isn't it? Yeah. If you can,
It
if
is.
you don't have to go external, then that's the best way. If you can manage it, all internally, that is great. But I think from your perspective, it sounds like some of your, external funding, you're getting it from the strategic investors who can actually bring you more than money to you, like Tencent, like Bloomberg, just your alliance with them that makes it. I think you're going dark, Leanne.
Oh, am I?
Yes.
Going dark.
Yeah.
Oh, yeah.
It's fine now.
Personality.
Oh, what happened? Yeah. Yeah. Anyway.
No. My team have just given me the answer to your question. So sorry it went a bit dark.
Oh, wow. That is great.
Yeah, so there's more than 40 startups that have been invested in across Queensland on the BVF. So not over 100, so about 40.
Yeah. Okay.
And they've resulted in 400 new jobs.
Wow.
And there's so many actual companies that are listed on the Business Development Fund website. So we'll get you that link. You can look through them.
Yep.
Some of those companies are really big global companies now, like Tritium. Tritium's a company that is using fast charging electric vehicle technology across the entire world. Also Jesse, and I know Jesse's been working in COVID related workplace planning right now too. So that's pretty exciting as well.
Yeah.
I haven't really got a list of those that have been exited by the BDF, but I will get you those and we can go through it.
Or the website would have it.
Yes.
Yeah. No, thank you for that. Yeah. Great.
No problem.
That's like really quick, right? The speed. This is entrepreneurial, right?
So you were asking about smart money versus dumb money. Yes, this is it. Exactly. Yeah. So if you have a strategic investor, the real value in investors is not always just the cash that they provide, but also access to markets, connections within industry. Right. Our investor, Tencent, is quite a powerful investor in mainland China. And of course, it's a very different environment to operate in China versus operating in other parts of the world. So their lived experience of being on the ground there helps us tremendously. Yeah. So too does their experience in really high scaling technology and very, very complicated technologies. So we are able to work with their technology team and our technology team to build a better product. And so this is the type of smart money that would be really interesting to kind of contemplate thinking about fundraising.
Yeah. So how did it actually come about, that Tencent link?
Like most things, it always starts with a phone call, a LinkedIn email request, or a nudge on a social media platform.
Was that actually a cold email or cold LinkedIn thing that you sent? Or is it via someone that you already know?
No, so it was a very strategic outreach. So I sort of had very clear plans about where I wanted Everledger to be at a different timing in the world, and just began to really work towards how I would gain access and the connections to some of those companies. We, as Everledger, started in 2015 at the very start of blockchain revolution. So our profile globally is quite a large profile. Yeah. So Tencent reached out to us very early, and we were able to make that connection. It was about 3 or 4 years ago now, but we said that we weren't ready yet. It would take a number of years for us to get to the point to be ready to go into China. So here's another tip. Not all investors are the right investors for now. Some of the investors that you meet will take more than 1 or 2 or 3 conversations, and it might be many years into the future when actually the right timing for that investor to come into the organization, especially if the timing of their investment is also driven on strategic value as well as the cash component. So be really mindful of that, mindful of timing and the importance of time in terms of being an entrepreneur.
Yeah, talking about timing, in my travels, I found that some of the VCs, for example, would say, yes, well, you've got $1 million of revenue. We need you to get to $3 million of revenue before we'll look at it. Did you find that in your sense, in your travels as well? And what do you think?
Of course, that's very normal. It's a very normal conversation. There are investors that are seed investors, that are pre-revenue investors. Others are leading out in high growth, high scale. Others want to come in 6 to 8 months just before the exiting or into a public market. This is the reality. So just like you have different CEOs that have match fit different types of operational timings within a company, the exact same thing occurs. I'm a great founding CEO. I'm an incredible founding CEO. The operational banding of a CEO through the time post scale, it bores me, and I'm fantastic at exiting. So I always like to start a bit in the middle.
Right. But
Just
you
like a commercial brand.
But you seem like Everledger, is it like you're actually doing it, you know, sort of transforming all the time, you know, rather than that's just the normal operating here and there, and especially with, you know, COVID, that's what's happening with COVID. Do you find that you are changing what you're doing as well in your company?
So we're a 5-year-old company, and I'm building a forever business, a forever company. You know, the name of the business is Everledger. We work, diamonds are forever. So we're building a company that will stand the test of time. And mostly when we think about COVID, there's very many challenges that are occurring right now. And instead of looking at annual strategic decisions, we're now looking at this across each month and each quarter. One would say we're pivoting, but that's not the case. We're still anchored very clearly inside of our product suite. And yes, we're looking at deeper expansion as a part of the diamond industry, but we're also very excited about the new and emerging industries that will come about COVID. Circular economy, a prime example of that opportunity. And we've been working in that space for the last 3 years of Everledger. So we think it's a pretty exciting time the next 5 years, because we're perfectly placed to do diamonds to gemstones to art to watches to wine to electric goods as well. So we think it's an exciting space to be in.
Right. So Everledger,
the Google of objects, they say. The Google of objects. Just Everledger it, then you know it's safe.
That's great. That sounds really exciting, and I think it's really required as well. There's definitely a big market in terms of you know, what we call them authenticity of things, right? You know, you've got to, and especially in the I guess maybe in the higher end products, the luxury stuff that people want to know what they buy is what purports to be the truth, right? Yeah. So. And do you?
Yeah, now more than ever we think about authenticity, but also secured supply chains. Like in COVID, we're concerned about PPEs and masks and gowns, the medical. All of that needs to be traced and tracked, particularly now, because the threat of, say, a counterfeit handbag will only really fear for your bank account, but the threat of a counterfeit ventilator can fear for someone's life.
Wow. So you guys are actually involved in that as well. Wow.
We're looking at it deeply. It's not in the public space. So if you're listening to it here, you've heard it first on the public channel.
Wow,
definitely looking at part of the world.
Right. Yes. I know that I got involved in a little bit as well because, you know, people were asking me if I can help with that kind of products in China. And it's like a quagmire there, you know, just like there's so many counterfeit stuff, so it's not funny, and it's not great either. So really, you know, people shouldn't be making money out of this, doing this sort of wrong things, especially at this time. But it still happens, unfortunately. So, but yeah, which means
I agree. But as we begin to bring manufacturing back to Australia and in Queensland, there's a whole nother sort of layer of technologies that will need to be performed and embedded within objects. And we think that's a great opportunity as well.
All right. Yes. What else? Oh, yeah. I still have a couple of questions, I guess, in terms of your capital raise coming back. So did you, like, specifically, did you have to pitch to a lot of VCs or a lot of high net worths, or did you just, you know, you kind of have your roadmap and you sort of know exactly who to reach out to? One or the other?
I would say we've had conversations with hundreds of venture capital companies around the world, investors, and we continue to talk to every investor that's interested in Everledger. I think discussing something with an investor is very different to pitching. So we're always engaged. We're very open in terms of our dialogue and our conversation. We're happy to share information about what the company is doing and where it's going. But a pitch is a very different type of conversation to be had. A pitch really deliberately looks at the valuation, the type of raise, how is that going to be used in terms of its capital, what is the revenue impact that it will come. And I would say that we've only had really a handful of pitches that we've deliberately engaged with. We've sought out many different engagement models with our investors or those that are in the community. It's important to have a broad streaming of business development when it comes to investors. But when it comes to sharing the deal room, looking at the documents, doing that type of deeper investigation and the deeper commitment, we are very selective about who we speak with. So we don't just talk to anyone, anytime, anywhere. It's always find into a strategic positioning for us. That's also not how many other companies do it. A lot of other companies do take the time to discuss and pitch to hundreds, if not thousands of investors. But because we're very specific, we work in a very certain part of the world, certain marketplace, like the diamond industry. We know there's only a handful of investors that understand just how Everledger is.
No, that's very true. So I guess from my perspective, it sounds like you are you are building a relationship before actually, talking about anything specific with the investing, isn't it? You're building a relationship with your potential investors along the way. Is that right? Leanne, can you hear me? I think you're...
Everything is built on relationships, even our customer and the relationship we have with our staff, the relationship with investors. It's no different. You can only embed trust through the physicality of connection. So, of course, building a relationship with it is critically important.
Very good, very good. So what do you think actually made the investors invest in you in the end?
There's probably a number of things that are very novel about Everledger. So I know that investors are really looking for the size of an addressable market. Is there a competitive landscape? Is this a blue ocean strategy or a red ocean strategy? Is there something about the founder or the CEO or the founding team that provides for a very spectacular set of individualized skill sets? And I guess that we tick all of those boxes. Female-led CEO, technical background, working in the diamond industry, multi-billion-dollar industry, if not a trillion-dollar industry. High competitive threshold, so there's a moat around our business, and it's blockchain, new technology. It's and really it can scale.
No, that sounds really great. Thank you for that, Leanne. Thank you very much for all your insights today, and you've provided enormous value for our listeners. I think I've taken down quite a lot, and I'm sure I will re-listen to this to get all the gems out of it as well. So thank you all very much for listening as well. If you want to hear more about the topic or others, go to my website. As Richard Branson said, learn to raise capital by any means necessary. So tune in next week on the Capital Raising Show to hear another successful capital raising experience.